Hello and welcome to Super Insider, Australian Retirement Trust podcast series on all things the economy, investing and your precious superannuation. My name is Anne Fuchs and I'm the Executive General Manager of all things education, guidance and advice here at Australian Retirement Trust, otherwise known as ART. And it's an absolute pleasure to be the host with two fabulous people on the podcast today. The energy is going to be off the Richter scale. Brian Parker, our Chief Economist.
Thank you, Anne. It's great to be here.
And Joshua Van Gestel, our Senior Manager of Education.
Hello, Anne.
Hello, sir.
Brian.
Hello there, Josh.
Now, we are going to be talking the budget that has just been handed down from our Federal Treasurer, and we're going to be talking about the state of the economy, sir. So for our listeners, of course, everything that you're hearing is general information only. It's general advice, and certainly you'll need to take into account this information and what it means for you. And I would strongly encourage you to get some personal financial advice before acting on anything. Now, here we are. It's that was the night of nights for all of those people who are junkies about economics, government,
Brian's
policy.
not really a budget junkie.
I'm not really a budget junkie. I mean, most economists are budget junkies.
And you're not a budget junkie?
I'm not a budget junkie.
Okay,
no.
Do we need to do therapy about this
No.
afterwards?
It's taken me years to actually wean myself off being a budget junkie.
Okay, all right.
Because I just have this view that, especially given what we do for a living at ART, we're managing long-term retirement money. And so what happens on budget night in terms of how we invest members' money rarely, if ever, makes any great difference. We're much more interested in the very, very long-term outlook for things like interest rates, inflation, growth, profits, exchange rates, whatever. But we're not, and that doesn't really change based on anything you hear on budget night. So, yes, we do pay some attention to it, just so I can help Josh write his article. So I pay some attention to it, but in terms of how it impacts on our investment strategy, it doesn't really make a big difference, if you like. I can say some things about the budget, but like I said, it doesn't make a great deal of difference to the way we invest money.
I, on the other hand, am a junkie and make up for Brian's lack of
enthusiasm.
Yeah.
Yes, that's right.
Yeah.
That's
Okay, but it looks like I shouldn't say thankfully, it just means thankfully in terms of less work for you.
Dare I say it was a super budget, Anne? And it was super in the fact that there was not a lot of superannuation in it, which I think, though, that what little there was really important. We saw the government actually announce earlier this year around superannuation on paid parental leave. That was confirmed last night in the budget. And I think importantly what that means is that we know that women are going to retire on considerably less than men. And super on paid parental leave, so that's 12% on payments that they receive for up to 20 weeks. So it actually starts to actually close that gap. So a very small announcement in what was a budget with not a lot on super, but I think a significant announcement.
Well, we were talking before the cameras started rolling, so to speak, about some of the, I guess, the assumptions made around interest rates and where they're going, and the economic forecast. The Treasurer did sort of have a gloomy. There are still some clouds in the distance around unemployment and the global outlook, particularly geopolitically. What are the cliff notes? I remember cliff notes were very handy in high school for English. What if you're going to give the cliff notes version around the interest rates component of what and the interplay in with unemployment? What would you say to our listeners?
I would say that last night's budget has been fairly carefully calibrated to not give the Reserve Bank too much grief. So, in other words, does Michelle Bullock wake up this morning and read the details of the budget and go,
this is news to me.
This is news to me. I'm going to have to I'm going to have to think about raising rates now. That's not what's come out of that at all. I mean, the budget certainly, if you look at the actual policy measures and their impact on the budget, there is an easing in fiscal policy, but we're talking about 0.3, 0.4% of GDP in terms of the policy announcements. And so it's not those are not the sort of numbers that would really dramatically change the outlook for either the economy or for monetary policy. So I don't think we should look at this. I don't think it makes Michelle Bullock's job easier, but it doesn't make it massively harder either. So I don't think we should change our views on where interest rates may or may not be heading based on what we heard last night.
But with the economic outlook, and the Treasurer was, I guess, trying to manage expectations around the environment we're trying to that we as a country are operating in, where globalization has happened and we're not immune from things happening around the world as we know. Are there any takeouts from what you heard around that you think our listeners might be stewing on about their retirement savings and how it could impact them?
Yeah, look, I think it's fair to say it's certainly an acknowledgement that the world is a really challenging place. If you think about the economy, so far last year the global economy actually held up remarkably well, given the fact that interest rates had gone up so aggressively. Interest rates, on balance, are probably going to come down across much of the world over the next maybe year or so. What that really tells us is that if that does happen, it means, yes, inflation has probably come down a bit further, and that's a reasonable forecast. But it also probably means that the global economy is not all that strong. And I don't think we will see a very strong global economy. I think we're in for a period of somewhat weaker global economic growth. Yes, lower inflation and some reduction in interest rates. But I think it's also a very uncertain and volatile world. I mean, the geopolitical issues that the world is facing, they do have impacts on the global economy.
And they're not going to go away anytime soon.
No, they're not going to go away anytime soon. And, the fact that the world is a very uncertain place geopolitically, it adds to, it makes the world economy a more volatile place. It makes it harder to do business. It means you see a lot of disruption in terms of things like global supply chains, where businesses choose to source raw materials, where businesses set up production facilities. All of that is affected by the sort of geopolitical environment. So I think it does certainly, and there's a great deal, as usual, there's a great deal of analysis in the budget papers about the risk factors and the uncertainties out there and just how hard it is to do any kind of forecasting in this sort of environment. I mean, forecasting is always hard, but it's even more so just given the uncertain world environment we're in.
Josh, as the budget junkie that you are, declared junkie,
yes.
Around, there was a lot in the budget around Made in Australia.
Yeah, there was. And I think, though, it's interesting in even talking about that, a lot of that is being pushed forward into future years. So thinking around hydrogen or green hydrogen production, mineral exploration, and really those rare minerals and things like that. But a lot of that was very forward thinking.
He was 27, I think.
Yeah. And from my perspective, and picking up a bit of what Brian said, there were probably two things I thought about with where our members maybe need to think on. The first is the word inflation came up a lot in both the budget, but also a lot of the media afterwards. And we know that, particularly for our members who are income stream recipients, that inflation has been eating into their real return. And it's now at the hard end to bring it down further. So as Brian sort of alluded to, it's still got a bit further to go, but it's really sticky at the moment. And I think that will more affect our members' real returns day to day. But the second thing I think about, even in thinking around the announcements around Future Australia, I think it more talks a bit to what Brian said, that we think about members' money in very long-term terms. And so, there were investment opportunities announced, even the government talking a bit more about housing, that I think that's where it gives longer term opportunities, perhaps from the way we look at investing.
Yeah, there's a fair point. And it brings, especially given the sort of inflation environment we've been in. Now, the good news is inflation is coming down. Interest rates are also likely to come down over the coming year or two. But what it also means
That's the closest to a prediction I've ever heard from you, just quietly.
There's a minor slip.
Yeah.
But basically, one of the other interesting things, if there's a silver lining to the cloud, if you like, it's that if I was transitioning into a more conservative investment strategy around now, I'm actually better off doing that now than I would have been, say, 2 or 3 years ago. And the reason is that, as you say, if you are transitioning into getting more of your return from income, from things like term deposits, from cash, from bonds, because interest rates have risen, the future returns from a lot of those investments are now considerably better than they were several years ago, even allowing for inflation. And for a broader spectrum of investments, any investments such as things like private debt or some of the infrastructure assets we invest in or some of the property assets we invest in, the future returns from some of these assets that are at least partly linked to interest rates have also gone up a bit. So the future for investment returns actually still looks quite reasonable. And I think the other thing to bear in mind about this is that, yes, superannuation is the longest term investment most of us, or indeed any of us, are ever going to have. And even though the world is in a very uncertain place, every crisis comes to an end. Every recession comes to an end. Every burst of inflation kind of comes to an end. Life in the economy and business goes on. Over the course of someone's working life, you could have multiple episodes of geopolitical uncertainty, of recession, of bursts of inflation. And it's about making sure you've got enough diversity in your assets, enough diversity in your investment strategy so that you've got something in the portfolio which will provide you protection across a range of those different environments. And that's exactly the way we think about building portfolios.
Okay, so if you're an older member though, and so you're right, but I think a lot of our members who are at actually either in income phase, they're not working anymore, or they're so close to it. And yes, inflation is a worry, but in the conversations we have with members, and we have thousands of conversations every year, and as you both do when you're on the road, they do worry about just the volatility of the markets. So things are, we're chugging along, but November's going to come around pretty fast, which could be. So, and I'm getting at the US election is what I'm getting at. How does our investment team, you talk about super being a long-term investment, but that is going to be a defining time for us in the world. How do our investment team think about that?
We think about that, again, by looking at the long term. And you look at, for example, if Donald Trump were to take the White House back again, what would that mean? And for the world, I think it has serious implications. I think that there's certainly, it is a recipe for lots of volatility, lots of confusion and bouts of chaos, because that is shown to be Trump's modus operandi. But in terms of markets, what we've also seen is that markets can actually cope okay with that. Or at least, yes, you can get periodic bouts of volatility, but markets over the course of, the Trump administration, yes, there were bouts of uncertainty, but there are also periods of market strength as well. So, yes, politics matters and geopolitics matters, but at the end of the day, life and the economy and business and markets do tend to move on. And again, to take your earlier point about those people in retirement or approaching retirement, there's two things I'd say, especially those people who are just, I'll call it coming into land, if you like, into retirement. The last decade, ironically, even though there's been plenty of things to worry about, have generally been a period of reasonably good returns.
Well, we've had a global pandemic. You
had the GFC, the aftermath of the GFC.
A war in Europe.
You've had a range of things happening. Even before that, going back to the Euro crisis, the Greek crisis, for example. So there's been a whole bunch of bad things that have happened, but yet overall returns have been in line with or better than the return objectives that super funds have set. So in other words, you're going into retirement already with a bit of a nice financial buffer. But to take your point, the last thing you want is a stock market crash or a major bout of volatility just before you retire. You don't want that to happen. And so it's important to ensure that the amount of risk you're taking at this point in your retirement journey is right for your stage of life, so that if something does bad to happen in markets before you retire, it doesn't blow your investment strategy out of the water. And this is where financial advice is a big, big help.
And the life cycle.
And the life cycle default. Yeah. And again, Art's life cycle offerings for those of our default members, we very, very carefully and deliberately reduce your risk as you approach retirement, so that we're not taking undue risk just when you're approaching or when you're just in retirement. And so, and in reality, if you're not in the default and doing that, I think it would be a good idea to actually talk to a financial advisor and actually make sure you've got a strategy that suits your phase of life and your appetite for risk.
And I think it's an interesting point, though, Brian, that you talk about those people who have been on that journey over the last decade or so. And you're seeing a lot of them who have been drawing down a retirement income but are actually now in a position where their capital is equal to or stronger to where
and that's
they
extraordinary.
started.
Yeah.
And that is extraordinary.
But it's thinking around the last few years, we've really not known where the economy would go and where markets would move, but you're still seeing this benefit of long-term investing.
You are. And last year, share markets did very, very well.
Yeah.
We've come through a period, the 12 months to December, to March, you saw double-digit returns from global equity markets, and that's certainly turbocharged returns. And so, it has been a very, very good period for investing. But, it does highlight to me that trying to predict where the markets are moving in the short term is pretty much impossible. 12 months ago, I don't think anybody would have foresaw, given the state of the world, that we were going to A, avoid recession, and B, have double-digit equity returns. That was quite extraordinary.
No, but I think so many of our members are going back to the budget, and probably our older members, the ones who are in income phase, this whole sort of anxiety around inflation is probably almost exasperating because we see a lot of our members, to your point, their starting balance remains intact even when they depart the earth.
Yeah.
And is that a lost opportunity?
It is a lost opportunity for retirement, I think. And it reminds me, it's almost like superannuation, because the markets have generally been kind. It's almost been like a magic pudding investment strategy that you've drawn down on it, and there it is. It's back again. And it's called the drawdown phase.
For a reason.
It's called drawdown for a reason. And I remember before my mum passed away, about a year or two before that, and mum was saying that she wanted to leave us something. And she didn't live exorbitantly, but she had a very a comfortable lifestyle. And I remember saying to her, Mum, if you shuffle off this mortal coil with more than $1 left in your savings account, that is just bad planning on your part. Spend the money.
Yeah,
but again, there is this very much deeply ingrained part of our psyche that we want to leave something to our children and grandchildren. We want to leave some sort of a legacy. But I think balancing, as a general rule, I do think people can afford to live a bit more comfortably in retirement than perhaps they are.
And certainly the budget has created a few sort of assistance opportunities for people worrying about their electricity bill. And
we did see some other measures in the budget that I think are going to help on the periphery, even thinking around people's mindset. There was funding put forward to help the ATO in fraud detection in superannuation tax system. Very aware of how data is being used now and people trying to access information and money. So good to see that the ATO is going to have more capability there. And I think also we saw that the government's decided to freeze deeming rates on age pension means testing for another 12 months. So I think those two things, although again, not huge announcements, not major announcements, I think they just help give a bit of comfort or maybe appease some of the anxieties around some of those peripheral issues.
But I think too, things like the support around the cost of medication, particularly if you're an older member in retirement, and you've got your cholesterol tablets and all of that. If you are in retirement and you're
we're familiar with it.
I've had to go with cholesterol tablets.
I've got to feel better now.
We're all getting old. But so I guess what we're saying is to our listeners is that the portfolios that we're building are constructed in such a way to actually manage the risk on your behalf so that you're not having to recognise worrying about cost of living and inflation.
So I think it's just timely that we do have the end of financial year coming up, and there are going to be some changes which provide more opportunity for super coming into the new financial year. So on 1 July, we're going to see the contribution caps go up, so how much you can actually put into super before you have tax penalty applied. So concessional contributions, which are largely employer contributions, salary sacrifice contributions you claim a tax deduction on, that cap will go from $27,500 to $30,000. We're going to see superannuation guarantee go up from 11% to 11.5%. So again, we'll see more money flowing in. And then the non-concessional cap, so contributions that we tend to make personally and not claim as a tax deduction, we'll see that cap go up from $110,000 a year to $120,000. The other indexation will be for government co-contribution. So we'll actually see the amount you can earn and still qualify for that go up very slightly.
And there's the stage 3 tax cuts coming in. And if you could afford, if you are, if you have some additional money from these stage 3 tax cuts, they will help obviously with cost of living. But also it's easy to mindlessly spend money on things like subscription services and Uber Eats and coffees.
But look, I think the main message I think that we leave our listeners is, yes, the world is a very volatile place. We know that, but there is always a light at the end of the tunnel. And as I often say, that there's a light at the end of the tunnel, and it's not a train; it's the end of the tunnel. That life, the economy, and markets go on. Super is a long-term investment. Make sure you pay attention to your super. If you're listening to this podcast, it suggests that you are already, which is great. Get some advice to help you decide that the investment options you're invested in suit your stage of life, suit your appetite for risk. If you think you might be taking too much risk, do get some advice before you make a change. But yeah, there is still return opportunities out there, and our job as a major super fund is to make sure we're capturing those opportunities.
And when you talk about the train at the end of the tunnel, I always have this vision when I was a little kid from Sesame Street. I don't know if you remember, there was one part of Sesame Street where there was the tunnel and the train, and it always takes me back there, Brian.
Must have been after our time, Brian.
I think it might have been.
Okay, so thank you very much. It's been great for our listeners. If you need to know anything more about how to get ready for retirement, what happens if somebody passes away, what do you do with your super? There's just a wealth of content for Super Insider Podcast. So please subscribe. So we're just putting more and more episodes on there. That way you'll never miss one. And there's more and more fab people from art coming on the show. We've got just a huge array of talent.
Oh, we are, absolutely.
Okay. All right. Thank you very much, Brian, Josh,
Thanks,
and thanks to our listeners.
Thanks.
All right.
Thanks,
see you.
everybody.
Bye.